Hello everyone, Jesse Webb, TradersPro. Market conditions mildly bullish in a bull market. Had a pretty nice rally the last 3 days, and starting to break some upper levels that may prove to be sustainable for this rally at this point. We've got this current rank at 13.2, as I've mentioned before. If you're new to the site and channel, that's representing this number right here. This time frame is 1 year. This time frame is 20 years. And so this perspective right here of this market trend is just pulling in this last little part of the chart right here as market trends, bear markets get really extreme like that. That would have been the bottom right here. As they start to top out and get a long ways up above that location, then that becomes this area of the chart. And as it crosses over from this bearish trend to this bullish trend, that's where we get this arrow happening right here. It is a momentum signal. So you do get a little bit of confirmation or a little bit of lag, but when we're looking at extremes, we can also look to see, okay, we have moved too far too fast. We're probably going to have a reverse. We're at, there's no more sellers or there's no more buyers, and we're going to pause. This is also the long-term market perspective. So when we're looking from the top-down approach, we want to say what direction is the market moving, and then work from there down to what sectors are working, what stocks are working, and that essentially is how the overall system works. So our short-term signal, we're bouncing off of these lows right here, and when we see sentiment up here and then we see momentum and breadth lagging that's typically a bullish location. When we see sentiment all the way down here like it was last year, this is also a 1 year chart, then that can be a significant market low. When we see sentiment up above all of the other indicators, it's typically just a typical buy the dip location. So when we're looking for opportunities or areas to say, should we be buying into this overall uptrend, this typically is a good setup for that. We also have lots of other things that are supporting this trend currently. Momentum has moved back up into this middle range, breadth working on it, and sentiment is still positive right here. The buy-sell ratio had a really nice move yesterday back towards each other, and that is what we want to start to see. As we've talked about these extremes. All of these extremes are just not sustainable. This was the first part of that three-part counter trend. We'll look at the S&P here in just a minute. And then this is the second part of that counter trend, also hitting lots of support on S&P 500. And then also lining up with the sentiment indicator when we have that at these extremes. So here you can see you have the sentiment indicator, which is down here in this buy zone. You can see how consistent that typically is. And same with these upper ranges as well. Once it's up in those upper ranges, we also want to be able just to glance back at the buy-sell ratio, because you're going to get some correlation there. You're going to get this being wide, and you're going to get this sentiment with the sentiment indicator, which is going to be bottoming out right here. That's what we want to see. And on the opposite side of things, we want to see this in this upper range, and we want to see the buy-sell ratio separated this other direction as well. More bullish. That's a bullish uptrend. This is a bearish downtrend. And as they start to work their way back together again, that can give you a little bit of a bias to say, okay, obviously we're in a bearish trend. Because this red line is above the green line, I need to be a little bit more cautious. I maybe need to take smaller position sizes. But as it works back the other direction, you can start to build start to get some accumulation ideas, a little bit more positive on that. If we also look at SP 500 chart here, you can see we've broken through a couple of different areas. Let me change the signal just to traditional candles. And we've talked about this support area here. In fact, I did a longer video yesterday explaining this in a little bit more detail, and this support range really is holding up nicely. This becomes a buy zone. It becomes a demand zone. The sellers are done. There's nobody left to sell or nobody interested in selling, and we get a reversal back up the other direction. Now we're stair-stepping back up above these main lines, these support areas. And so now we're up above this 50% retracement line, and that should start to act as support again. So we're getting constructively bullish activity now, where we're instead of breaking down and then this being the overhead resistance and then moving this direction and breaking down, now we're working the other way. We've broken up this through this line. Now we've broken up through this one as well, and we'll probably chop around inside of this zone, ultimately finding support and see if we can break out above that direction. Ultimately, once we do and it works its way back up into the momentum zone, we're still kind of in that corrective zone where we get an uptrend and we get a retracement. We're working on correcting a trend. Once it begins, once that is corrected, and maybe this stock has done something like this ETF or the market as a whole, and we're back up inside of the momentum zone. We'll look at some stocks and it'll make more sense, but then it becomes a little more clear for momentum trades and more momentum setups and more confirmation that we're in the right direction at that point. If we look at sectors, let's take a look at the sector ETF location, because we just had a huge day yesterday. It moved almost everything short-term uptrend, almost everything out of hold or a sell back to hold. Sorry, I'm struggling this morning. And again, another constructively bullish look at the sectors as a whole. The other factor that let's talk about quickly is market ETFs. If we go to TLT, this is one that we want to see rallying right here. We're still stuck in this downtrend right here, but we want to see bonds rally and interest rates start to drop. I've mentioned this ETF in the muscle ETFs in this upper range. It's PFIX. This is actually an interest rate ETF. So you can see as interest rates have been climbing and bonds have been falling, this is a way to be able to trade interest rates themselves. Obviously, it's a little bit extended to the upside, but now it's falling back in this buy zone. So hopefully we see bonds continue to rally and we see rates at least pull back to this area. I think the market would welcome that scenario. We also are seeing some of the other talking points that are out there right now are commodities, and just in terms of oil mostly. We saw the sell-off, the retracement back here to 382, and a pop yesterday and the day before based on some geopolitical risk that's out there in the market. Ideally, oil continues to pull back. It has been in a pretty strong uptrend currently. The other real talking point on commodities is gold, as traders, investors are looking for maybe a flight to quality. We've seen gold pulling back, pretty significant downturn, but it's starting to pop right here. I'd keep an eye on gold if you're looking for just another type of asset class and some diversification. It's pulled all the way back into this counter trend corrective zone, some swing low, swing high. Deep ABC three-part counter trend, 1, 2, 3. We call that an ABC counter trend pattern, where we have this ABC and it works its way back into that 50 to 618 retracement location, and starting to get some activity there. Interesting chart pattern. Still has some work to do. Still in a downtrend, but starting to wake up a little bit out of that downtrend. We'll see if we get any continuation on that. The muscle stock group today, the new buy list, DAKT is the top one of the day. Let me just check this back to signals. We've got this new buy in the momentum zone. Some really nice fundamentals on this stock as well. The annual EPS, quarterly EPS, sales not super impressive, but 30s and across the board. ROE 600% increase on annual EPS. It's had a nice run already, but it's been counter trending, correcting a lot right here and starting to work its way back up above this zone. Not a real solid looking bar. It faded a little bit, but let's see if we get any continuation on that today. What was that? Why can't I say that? DAKT. And SYM is the second stock in the list. These are also good stocks. I don't love these. I prefer to have a stock that has already up in that momentum zone. It's up here, but nonetheless, depending on your strategy and what you're looking for, this is starting to turn the corner. Potentially could have some upside here on SYM. And EHTH, nice confirmation bar on a breakout, and pretty deep counter trend too. Let's look at the 1 year chart. It's got some volatility to it. these counter trends, but you can see this one here, a lower low, a higher low, and starting to work its way up that direction. It's got a bunch of overhead resistance. Not, just glancing at that, not an ideal candidate for we want to be up in that momentum zone. Let's go through the next couple and see if there's anything interesting. ACLX, a little bit low in the trend on the 6-month. CRS, these are the ones I like. This type of pattern right here. Basic material steel stock. It's had a breakout. It's created a new high. You can see the snap tool is connected to the new high and the new low of the chart. That kind of resets this level to where we have this support area. If we drag that back, if I drag it back by a day and just get rid of that, now it's connected to this high, and you can see that 236 momentum zone really becomes solid. And that's an indication that it's still in an upward trend momentum-wise. So if we're connected here and we retrace and we hold this level and we start to move back, these are great areas to be able to add into a momentum style. That is the primary focus of what we're looking for, is a stock that's moving higher in this direction. And ultimately, this is what we would anticipate, is more upside, more upside, more upside until it stops working. Once it stops working, you're going to get a red signal, or it's going to break down below some stop losses. We've got all kinds of other different strategies to utilize. That's going to do it for today's update. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.